Hi everybody, this is Ellman, the blue collar investor, with today's option selling question of the day. Today's question comes from Chevy. Alan, I use your report to write weekly puts. I am currently using Square as an example. As an aside, I would love for you to explore this strategy in one of your Ask Alan series or otherwise. Thanks, Chevy. Well, no sooner said than done, Chevy. Here we go. Let's have a look at the strategy of selling weekly cash-secured puts. Now, whether or not we're selling weeklies or monthlies or further out expirations for puts or calls, we must first master the three required skills. This is very important. So let's just review those quickly, and then we'll apply those to this particular scenario, selling weekly puts with Square Inc. The first skill is selecting the underlying security. And so stock selection is number one. And we're going to have a look at technical analysis and fundamental analysis for this security before we move on to the option selection, which is our second required skill. So what stock are we going to use, and what put option are we going to use? Once we enter the trade, then we become managers of our positions, or whether or not we should apply any exit strategies. But exit strategies or position management, that skill is beyond the scope of this particular video. All right, so let's move on now and determine what our goal is, because before we implement any strategy, we have to know what exactly is it that we're after. Now, generally speaking, it's cash flow. And so what is our goal? How much are we looking to generate every week? Well, most of you know that when I sell my monthly calls or puts, my particular goal is 2 to 4% a month for my initial time value return goal range. Now, that can vary from investor to investor depending on your personal risk tolerance, but that's my sweet spot. In a bull market, I might go as high as 6%, but never higher than that for near the money strikes. So let's make the assumption now that we're shooting for 2 to 4% a month. Since we're looking to sell weeklies, we would then divide that by 4. So our goal range then becomes 0.5% or 0.5% all the way up to 1%. All right, so let's now have a look at the technical chart for Square Inc. and see if this is a stock that presents a bullish price chart. Okay, so here we go. Now we can see on the right side of the screenshot, the arrow shows that this is definitely in an uptrend. That's what we're looking for. We're looking for stock that's going up in price. And if you take a close look where we have that circled area also on the right side of the screenshot, what happened here was the short-term moving average, the 20-day exponential moving average, crossed above the 100-day longer-term exponential moving average, and then just kind of took off like a rocket ship. That's called the bullish moving average crossover. So we have an uptrending moving average, which is bullish, and we have that crossover, which also is bullish. So from a technical perspective, we're on the right track with Square Inc. All right, so now let's have a look at a fundamental view of this particular security. Now, one of the fundamental screens we use, and it's actually a combination of fundamental and technical, is the IBD Smart Select screen. We use this when we're screening stocks for our premium member stock reports. And this particular screen looks at both the fundamentals and technicals for the stock and the industry that that particular stock resides in. And if you look at the checklist where the arrow is, you could see that there are 6 green circles. Now, green represents the highest level of accomplishment. So this is an elite performer from a fundamental and technical perspective. Yellow would mean middle of the road and red would mean an underperformer. So when we're screening our stocks, we only want stocks that have all 6 green circles. So it's performing at an elite level in all 6 of these categories. And if you also take a look, icing on the cake, if you will, Square is ranked #1 in its industry. So we're good from a technical perspective, and now we're also good from a fundamental perspective. So let's move on now to option selection. Now, when we sell cash secured puts, most of the time, not always, but most of the time, we're looking to sell out of the money puts. Our goal is generally to generate cash flow. Okay? I mean, we may be looking to buy a stock at a discount, in which case we might move to in the money strikes. But for purposes of this video, we're going to assume our goal is cash flow, and 99% of the time we're going to go out of the money with the strikes, which means lower than current market value as it relates to puts. So since Square is trading at 80.28 as I'm making this video, we're going to look at strike prices lower than 80.28. And specifically, we're going to look at the 78, 78.50, 79, 79.50. So we're going to look at those strikes which generated between 42 and 89 cents per share, $42 to $89 per contract. Okay, let's move on now to the BCI put calculator. Feed this information into the calculator, and you can see in the screenshot here that on the top white cells we fill in the information that we derived from the option chain. Square trading at 80.28. The expiration was 2/14. Today is 2/10. So it's a 1-week expiration. And the strikes range from a high of 79.50 to a low of 78. And the premiums range from a high of $89 a contract down to $42 a contract. Now, once those white cells are filled in, the cells below that become populated, and we have our calculations. So the premium that we generated, we just went through, ranging from 89 down to 42. The amount of cash that our broker is going to require us to put into our cash account in order to secure that put is the strike price minus the put premium times 100. So that is information available to you. They're all around 7,900, 7,800 in that range. Now, the unexercised return, or the initial time value return, ranges from 1.13% down to 0.54%, which really lines up perfectly with our goal of 0.5% to 1% a week. And if we were to annualize that, you can go to the bottom row, you could see that range annualizes out from 49% to 103%. So the returns, initial returns, are excellent. Again, we haven't gotten into management if the trade turns against us, or if the trade turns out to create opportunities to generate even higher income. Now, if the option is exercised, how much of a discount are we getting if we take those shares and we purchase those shares as a result of contract exercise and assignment? And that ranges from 2.08% discount to 3.36% discount. So there is an advantage when we sell an out-of-the-money cash secured put in terms of getting the stock at a discount. And if we do, we can either retain it for our long-term buy and hold portfolios, depending on if that's our goal, or we can then write a covered call to continue generating cash flow. Let's just summarize now. Selling weekly cash secured puts, we must first master the 3 required skills. No different for any strategy that we decide to use as it relates to option selling, calls, or puts. What stock are we going to use? In this particular case, Square had very strong fundamentals and technicals, so good choice, Chevy. Option selection, for puts, we generally go out of the money, and we make sure that that particular strike is going to generate what our initial time value return goal range is. And then position management, which again is beyond the scope of this particular video. So we set up our initial time value return goal range. I can't emphasize enough that just because I'm shooting for 2 to 4% a month doesn't mean that you have to shoot for that as well. You can adjust it according to your needs and personal risk tolerance. But I'm happy to share with you what I do, and that fits my low personal risk tolerance. There are those that want to be even safer, and there are those that want to be more aggressive. One size does not fit all. And then we feed that information into the BCI put calculator to confirm that our goals are met in terms of initial time value return. And as I said, from there, we manage our positions. Okay, so before we end this video, I just want to remind you, all of our premium members, that only you are entitled to access the entire library of Ask Alan videos. Now we're at 174. We add a new one every single month, and that is always going to be archived on the premium member site. Just log in to the member site, scroll down on the left side where you see the arrow where it says Ask Alan videos. The first 10 are there, and then you click the link below that to get all the remaining Ask Alan videos. So again, we're adding one every month. On the right side in the resources download section, we do have an Ask Alan file of titles, so you may want to review that if there are specific topics that you like. But I try my very best to make sure that whenever I respond to a question for these Ask Alan videos, that there's a very strong educational component to them. So hopefully you'll find that most or all of them are worthwhile from a learning perspective. So Chevy, I want to thank you very, very much for that question. I know a lot of our members are becoming more and more interested in put selling. So this I hope you find beneficial. And certainly to all of our members out there who took the time to watch this video, I hope you enjoyed it, and I hope you make some money from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.